We've got a very special guest tonight, Malin Holmberg, because she was supposed to speak our annual conference in Barcelona. We host an annual conference with international speakers and obviously some friends of the house like Target Global, one of our favorite VCs, the Pan-European growth VC headquartered in Berlin, but as of last year, also present in Barcelona because they have invested in Body and TravelPerk, among others. And she was supposed to talk about deep tech in our conference, but we said, okay, what about we just change the topic of our talk tonight and we talk more about international leadership and how to navigate these difficult times. So thank you very much, Malin. Welcome to Startup in Barcelona.
Thank you for having me.
How are you doing and how are you adapting to this new reality?
Oh, well, no, I'm doing well, thank you, but it's starting to wear on, I think. In the beginning, it's all right. You work on your Zoom calls, you meet people, online, you try to get connections, and it's okay. But I'm really missing now that, meeting people properly. But we do what we can do. And I think it's been surprising, actually, how much business you can do in this way, even though it might not be as much fun.
Do you think this will shape the industry as well in terms of, all these meetings for coffee? VCs are famous for meeting people over coffee all the time, right? So you'll have to do these online. Will this stay or will we be going back to the previous situation?
Well, in my humble opinion, I actually think that this will stay to a certain degree. I think people have, gotten used to how you're able to actually run efficiently your work from home. And I wouldn't be surprised if many companies have a couple of days a week you work from home and the other days you work in the office, and structure the work a bit more around this, especially maybe in the cities where you have very heavy transportation, to get into the office, and you spend a lot of time on that. So I think it will change a little bit, and we will see some impact from that.
And how about the culture of working internally, right? Because even though your agents are pre-distributed, you've got Lena flying all around when she's not in Barcelona or in Berlin. But how is this affecting the internal coordination as a VC?
Yeah, I think, it's the same there. I think you can do it for a while, but there comes a point that when you really miss this, sitting together over a coffee or going out for a drink in the evening and really solving something that you've been thinking about for a while, or even these interpersonal things that you really need to meet to resolve. And I think that's missing. But that said, you can still do, synchronization and organizing the discussions within the firm, etc. You can still do that, but it loses, I think, a bit of that human element. And new people starting, I think it's very difficult, because if you met before, it's okay. But if you never met someone and you're doing everything online, it's challenging.
And how are you? So Target Global, from my external understanding, is a pretty operational and tries to gets very much involved in the operations of the companies you have invested in, right? In times like this, how have you been helping your companies? What's the value that a VC has been providing to the companies affected by coronavirus?
I think it's very similar to the value that you add if you were to meet people in real life. And it's everything from looking at how to making sure that you have enough runway until, for the companies have enough runway financially, to looking at whether you should, where you should cut costs or streamline operations for certain sectors to be a bit safer over time, to the cases where you say that actually you should push go, because this actually gives you a very beautiful opportunity at the moment to drive the online trend and to ride that digital trend. So, and I think you can do all of this in the same way over video if you know each other. I think it's more difficult when you don't know each other, in the beginning of a relationship. And so it's been okay from that perspective.
And do you think you're missing out on deal flow because you're not meeting enough people, or maybe just people are still, discovering how to get in touch with VCs? So how is that affecting your deal flow?
Yeah, I think as a VC as well at these times, you have to be very focused. And you have to have a clear strategy on what you're going to do during these quite, a little bit uncertain times. So I think given that, if you have a very clear strategy and clear focus on where you want to invest, etc., you can still get that deal flow, but you have to be a bit creative about it. You're not going to go to a conference and run into new companies that you haven't thought of before. You have to do more research, talk to people on the phone, etc. So in the short term, I would say not that bad, but if it keeps going for a long term, yes, then it will be very negative.
Let's start a little bit to dive into the topic of the conversation, which is the leadership and how to navigate international markets, right? Because if there's one thing that this coronavirus has allowed us is because it's open up our minds, or some people's minds, as to be more global, right? Not only focusing in what their operations were before, probably they were localized or they were regional or country level, but this has forced us to go global in a sense, right? Remote working, then maybe taking on more remote, so not only remote work, but also talking to clients over the internet, whereas before it was only presential meetings and all of that. So what is the biggest challenge for companies that they are local or regional and they got to open up globally overnight?
I think when it comes to critical challenges, one main point is to decide where you're going to go.
Yeah.
So actually, I think one of the main skills you have to have when you start expanding internationally is to prioritize the markets and to decide where to go in terms of understanding which markets are attractive for my business, where do customers use my product in a similar way, where is competition not that bad yet, etc. So I think that's a challenge. I think another challenge is if you're in your home market and you're going to break out and do something very different outside, then you need to drive the cooperation between the different functions in a different manner than before. So, product and development and the go-to-market sort of sales and marketing are often quite siloed in the organization. And when you're going to go into a new market, you need to synchronize all of that and really make sure that those teams work together to drive into a new market. So that's often a big challenge.
But how can you test? Because obviously some of these businesses, they were not prepared for that, right? And they have no prior experience in international expansion, or maybe some, but definitely they've been forced to choose new markets. And everywhere you go, it's pretty terrible, right? The situation is not very bad. Companies are not into buying mode, right? So they are not open. Most companies, they are not open for business. They're just laying off people. They're cutting budgets and they're canceling projects or putting them off. So how can you test the waters on multiple different markets, and how thin you get a spread? Where's the fine balance between spreading too thin or just, playing with enough markets to make sure you're testing everything you can test?
Yeah.
It's a very long question, right?
Yeah. No, absolutely. I think in terms of testing the waters a bit, you can try to enter markets more with a lighter partnership model, for instance. So to see if your product holds water when you go into this market without putting your full office there and a full feet on the ground. You could start with that, which is a much lighter model. It gives you lower returns, but it gives you also a lower cost and a quicker time to market in a way. So that's one way you could do this with. You could also start with selling the product on your own, but using the team that you have in your home market to a large extent, and putting a very light team in the market. I think if you're really going to try it properly in a market in a lighter manner, you would probably put in at least a local GM who understands the market, who understands the cultural differences, the regulatory, everything like that, and an ops person that can handle at least the minimum in the market. So this is a light way. Those two ways are two ways you could try if you don't want to go all the way in.
Sorry, go ahead.
Yeah, go ahead.
Yeah, I was gonna ask, because the finding a reseller or a partner is a great strategy, right? But it's perhaps a better strategy when it's a fair weather, right? In rough times, I think most companies, they have enough problems trying to sell their own products to take on additional work, right? So how do you make sure that, because it's very easy to say like, yeah, I can resell your product too, but they will not do it. How, and I see it from the perspective of I'm a software vendor, right? And we have tried this model with different companies in the past. It never worked because we are the lowest of their priorities, right? So how can you ensure that? How can you provide that, like a financial incentive, a contract? How do you measure that? Is there like a KPI based contract or performance indicators? How do you motivate them?
I think firstly you need to find the type of partners who are maybe trying to really find auxiliary revenues because of times are difficult, but maybe they need other revenues to drive and to hot up their business. And if you can resell a product in a simple way where it doesn't require too much integration with anything, it's just really a simpler resell. I think that's opportunity now, and you can see that companies are often taking these conversations right now that maybe weren't they didn't have time for before. Now, when they see that they might need those revenues, so try and find the ones that could be in that camp, in that category. When it comes to financial incentives, I think one of the things that you need to look at is really what's in it for you and what's in it for them, right? It's maybe very basic, but what do you get out of this deal? What do they get out of this deal? So it should be clear to them that if they sell to a certain level, they get a kicker, for instance, and they get a certain maybe rev share of the product, and then after they hit a certain volume, they get the extra incentives and things like that, which you would need to structure in.
Because one of the things I've seen in your CV is that you've worked all over the place. Like you've worked in London, it's also worked like in Croatia or something like that. I remember, right? Yeah. And you worked also in the Netherlands as a CEO of Tele2, Finland, if I remember correctly. So you've got all these different understanding of different backgrounds and regionalities, perhaps, or regional particularities. So in let's say in good times, you can just go straight to the CEO. I mean, if you're in a high position, you're a CEO yourself, you talk from CEO to CEO, you try to sell, right? But in rough times like now, maybe the CEO is not the right person to talk because maybe they are involved more in fundraising or in rallying the team and things like that. And they're ultra focused and they are just focused on the core, but not in these additional sources of revenue, right? Who would be the right person to talk to in this case when you want to talk to like this kind of partnerships, perhaps?
Well, I think you can talk to depending on how large this partner is, and that depends on what kind of setup they have. But if it's a larger partner, you can talk to their business development lead. Okay. So the VP of business development or the VP of sales. Those are usually the two that I would go to if I want to strike a partnership of to expand into their market. And then they are if you look at sales at the moment, they are very focused on trying to either they're very focused on trying to drive their current sales if they're going really well. If that's not going very well and the market is pretty dead in the water, they will focus on trying to get new things that could be relevant and drive for them when the market comes back. So I would target those two.
Okay, and how about paying for these? Because actually, a lot of large corporations that take advantage, they offer to open the doors to startups for innovation, whatever. But these proof of concepts, they are oftentimes, or most of the times, not to say 100% of the times, not paid, right? What's your position in this, and how can you incentivize big corporations to actually pay for these proof of concepts who can actually be saving startups?
Yeah, I was talking more about partnerships now, like sales partnerships and things. But if you're talking about, doing pilots with large corporates and things like this, that is very challenging. And it's always going to be the case that, the large corporate will look at this as a small part of their business, exciting and innovative and fun, but it's not money for them because it's too small. So I will be very careful. If my first deal as a startup would be to strike a pilot with a large company, a telco, for instance, I would say, maybe find another way to start. But that said, there are companies where you can manage this, but I think you have to manage it by setting limitations from the beginning. So yes, we will do this pilot. We will prove We will prove that this product can sell in this way, or we will showcase the product to this extent. We will, we will integrate with only this part of your business, and then we make a decision after that, and so that they get a bit locked in at that point to have an early decision point. Because otherwise, it's always in their interest to let this actually drag on, and even if they don't want to let it drag on, that's what they do, because that's how the organization functions. So you need to be very clear on how long is the pilot, what proof points are you going to deliver, and what will you get when those proof points are delivered. Very clear on that.
Is this something a VC can, leverage their position to help on these kind of negotiations with a bigger player?
Definitely they can. They can have that conversation up front to make it clear also that this will work, but only if we both take it seriously from both ends, and respect each other in a way. But it will cost, and it will take time to do a big pilot with a large corporate.
Yeah, obviously, when I asked the former question, it was not so much centered around being the first deal of a startup, because if your first deal as a startup is to go to let's say Orange or something like that, I can guarantee it's just not going to work unless you're the son of the CEO, right? Like in that case, probably it's going to work. But I'm talking more about scale-ups, right?
Yep.
Where they can dedicate an entire team perhaps to doing this kind of deal, or they have an entire division to VP of new markets, whatever, right? And in this case, one of the things, maybe I want to get your opinion on this, because we had an event that was the Corporate Innovation Summit here in Barcelona a couple months ago, and one of the companies had struck a partnership with MasterCard and with Visa, right? And they said two things that they were actually pretty surprising. First of all, it's the projects went well because we managed to get the CEO involved in that, like the CEO of the corporate, not of the startup. That's surprising. And the second was, obviously, we didn't get paid up front when doing the proof of concept, but in the contract was hey, we did a proof of concept, but we meet these metrics, we're going to get paid. So, are these the kind of things that you would advise companies to do, or have you seen them working? Or?
When it comes to the metrics, definitely. To be very clear on metrics and show that it's free to do the pilot until this time. If we show this and this and this, here is how it will be paid after. So definitely that's very important. When it comes to involving the CEO, that can be good, and that can also backfire, I find. Sometimes if you come in through the CEO and that gets pushed into the organization as this is a very interesting project, then the organization might just auto-reject it actually and say that, oh, it came from the CEO, it's just some pet project, that's not my thing. And you might not get it at all. So I would be a bit careful around that. But I think, you're mentioning an important point here when you talk about Visa or MasterCard. One of the things to look at is, have these companies been able to successfully do pilots with other startups?
Yes.
That led to something good for both parties, right? So I would always ask those corporates, what successful pilots have you run before, and could we talk to those startups? And it's worth having those conversations, because then then you quickly know if this is going to fly or not.
So you reference checking them, what you do with VCs
call,
or
right?
business angels, right?
Yeah.
Okay, that's another.
It doesn't take that much time, and it's worth it.
Yeah, and another thing here, I just because right now we are forced to talk to different markets, right? And you've got extensive experience with working, with Slavic culture, with Nordic culture, with the Anglo-Saxon culture. I don't know if you get other markets over there, right? But how do I myself as a software vendor all around the world, I see that the markets are very different according to the kind of people, right? It's, Nordics are pretty direct upfront. They like transparency. They like meeting deadlines. Whereas, in Spain, it's kind of like, it's okay to postpone things for a bit. Like a yes means 50% yes, things like that. How do you navigate that from your perspective as an international CEO, said like when you were CEO of Tele2, right? How do you learn how to deal with these kind of differences and nuances?
Yeah, I think when you come to a new country or a new market, I think it's a lot about listening in the beginning to just try and understand how the culture functions. Listen, ask questions, try and get the culture before you go in. So, I made many mistakes. Every time I move country, you adapt your leadership style a bit, right? So when I moved into one country, I asked for feedback on my leadership style after a while, and basically I was a bit consensus driven from the Nordic, historical, my upbringing of looking at consensus, and I got feedback that no, it's good, we're all feeling very involved and everything, but sometimes could you please just point, let's just do that, just tell us to do that. And I thought, oh, okay, interesting, but you need to get those conversations early on, and then get people to open up actually to share with you how the culture functions. Because it's incredibly different. And if you communicate without listening and tuning into that, you will talk across each other completely.
How much do you think language matters in these things? For instance, I lived 3 years in Germany, right? And even though I learned German, I'm not good at professional level, but I do find that when talking to potential German clients, if I address them in German from the get-go, they turn more, they open the doors, let's say, more widely, right? So these nuances regarding language, how important do you think they are in terms of conducting business from the CEO standpoint or from sales?
Well, I think it's always great if you can speak the local language and if you understand the local culture. So that's always a plus. If you cannot, and if you're coming into an environment and you need to try and learn it, it's always good to learn a few words to at least be able to say a few things, or even make fun of yourself by saying a few things, maybe not perfectly, but you try to actually understand. I think to understand basic human behavior and how we function culturally, how we run our businesses, what motivates us, what drives us, what makes us happy to work, etc. You don't need very advanced language, actually. So a broken English that most of us have will do fine to actually build rapport and understand each other. So I think to understand a management team in a country, you can do that in any language if you just do it in the right way. To talk to the wider group of people, to like the 2,000 people in the organization, then the local language would be much more important, right?
Yeah, because this is one thing that you acquire as a CEO. You start dealing with, I don't know, let's put an example here. You start dealing with Lithuania for whatever reason, right? And you go to meet them, you visit the country, you learn a little bit, you know, some language, some words, some customs, things like that. But then at a certain point, you gotta hand down this part of the business to somebody else, let's say your team or the person just taking over your responsibilities, right? How do you pass on this knowledge? How do you build teams that can sort of replace you without losing this cultural understanding of your clients? I find that is a big challenge.
It is a big challenge. I think, I mean, the best would always be if you can actually hand over, you know, the leadership to a person who's local in that country. I always believe that it's good if you can have local people running each local country rather than having, you know, international people moving around. There is a stage when that's important, but then there comes a stage when you can, you know, when this can change. And if you do that, then I think it's very important that you work alongside each other for a while. So you have to think about your succession planning, you know, a couple of years before that might actually become a point. You can't always do that because you don't know what happens in life and when you want to go somewhere or change. But you think about it a couple of years in advance, and you think, who in the team could I bring in, or do I have people in the team who are ready to do this? And then you coach them. And sometimes you don't have luxury of 2 years. You have, you know, 2 months. And then you basically sit with this person, you pick who it is, you sit with this person, work alongside each other, do a lot of things together as a team to hand over. And this I find is the best way.
And how about this first part of the conversation had more to do with how you deal with other people outside of your team, right? So sales, mostly partnerships, whatever. How about dealing with your own team, right? In times like this, in rough times, in adverse times, how do you communicate bad news to the people? How do you find the balance between communicating them too early and too late? I mean, I suppose you might have had to, I hope not, but you might have had to communicate this big bad news to a company, perhaps in your career. How did you do it? What was your strategy?
Yeah. Unfortunately, I have. I think you have to start with being honest and transparent. and as open as you can be. I think people respect when things happen, bad news comes. If it's open and clear and transparent, it's much better received. So as soon as you know that this has to be done, I wouldn't wait for a long time with that news. I would communicate that news quite quickly. I would also think about, if many people are leaving, so there is several functions leaving, then and there are some people being left in those functions. It is very difficult because then half of the function is leaving, half of the function is still there. So you lose half your colleagues. And I think it's all about respect in how you communicate this and how you prepare people for it. So straight, clear message, helping people find new jobs if you can, allowing rotations, allowing support to go to other places if you can, giving them a decent, clear upfront time so that they don't just get kicked out from one day to another. So following, the human decency, basically. And I think this is very important. Then the most difficult part, I think, is if you don't know how many people you have to let go, and then you can have another wave of layoffs coming a couple of months later, which I suspect many companies will be in that situation now, that you make a cut of employees, and then 2 months down the line now, you see things are maybe worse for this particular industry, and you need to do it again. And this is extremely demotivating for an organization. One well-communicated, situation of layoffs can be managed, even though it's difficult. But then if you have another one, then people lose all safety. So then they think, well, when is the next one? And then all people are thinking about is looking for signs of when is the next one going to happen. So if you can be clear and do one big cut, and rather wait a little bit with that, be very clear, and then do it, and then say this is what's happening for now. That is better than, I think, having doing one early on and then having to do more.
I think there's this interesting. So Ben Horowitz, actually, when he talks about peacetime CEO versus wartime CEO, I'm pretty sure we're all familiar with this concept, right? But how do you advise your companies, the companies you have invested in, to prepare their CEOs to be wartime CEOs? Are you actually helping them to replace, finding other profiles in the company or even in the industry, or can you actually train them from the VC perspective?
I think it's hard to instantly train a person in 2 weeks. I mean, or in one week to become a wartime CEO if you're not. But I think those are the times when you can see if people can really step it up and manage during hardship. It's difficult. And I think most good CEOs, they manage to step up to this, and they change the way they work. They change the way they think. You have to be extremely flexible, and you have to be extremely on the ball, so to speak, understanding exactly what's happening in the market. And then you have to make some decisive calls. This is what I'm going to do. This is what the direction we should take. And when all of this is going on inside the person, you have to stay very calm, I think, with your team outside, calm and clear with the direction, acknowledging that there is chaos going on, of course, with all this external situation, and it's not easy, but as clear and calm as you can be with the team. Because if you're moving one direction one day and then the next, the whole team will lose direction.
I was going to say, because I'm seeing it in some of our clients. So for instance, we're seeing that, the companies that just continue going straight because they know, it's a rough time right now. Yeah. But if we continue our strategy, we're so close to profitability or whatever, and they keep doing it, even if they lose money in the process, right? But some other companies are seeing it that they're going like, oh, this week I need this week I need that. Now we're pivoting here, pivoting there. And you see like a complete sense of direction altogether, right? This can be hugely demotivational to the employees. So in this regard, but not everything is lost. I think there's also the possibility of raising extra funds for the companies and try to solve the situation, bridge rounds or even, if you were already in a fundraising mode, maybe extending it for a little bit. You lower your valuation, you raise more money, things like that. What's your general advice for companies fundraising right now? If they're in the middle of the process, let's say, would you ask them to extend their fundraising to go for larger capital?
Yeah, I think it depends on, there's different categories of companies now that are in different situations. So definitely. I would say if you make it into 3 categories, you have the ones that are benefiting sort of horribly enough from this situation, right? So you have some companies in health tech or remote working. Those companies are doing well on the back of this sort of digital adoption. And for those companies, you can just keep fundraising, and I think you will get good valuation, and and that's as normal, or as before, I should say. Maybe not normal, but as before. For the companies that are hit by this and that are doing really poorly because their industry is down, like in travel or in hospitality, in those sectors, it is really difficult. And I think it would be, if you can, raise some capital from the existing investors, doing a bridge that will hold you through for another year or so until things are clearing up a bit. I think that can be helpful. Otherwise, I think, the valuations will have been impacted already. And then you have all the ones in the middle, where I would say that it's possible to raise capital now. If you have a good company and you're doing well and your metrics look good, the team is good, you can definitely raise. But if you don't have to, I would say don't. But if you have to, you can raise, and maybe be a bit more aware of that it will take a bit longer, and they might have impact on the valuation.
What's the best approach to give bad news to investors? Let's say a company goes south and you're not able to give the value you promised to your investors, and the CEO got to deliver the bad news. What's your approach here?
Be straight and be early. So tell it as it is, and tell it early enough so that there is some room to do something about it. If you wait until there is absolutely nothing that can be done, it's much worse. So I would always advocate having an open relationship with the investors, so that when things are starting to feel wrong, share that a bit. So if you communicate early, maybe you can allow the VC, for instance, to help you. Yes, with absolutely. That? Okay. Absolutely. Have you seen any case? Have you been involved in any case like this? Yeah, it happens all the time that you have discussions like this, but they are of different magnitude, right? It can be small things, it can be big things. But if you have a good relationship, a VC should be able to say, well, what is it that's not working? Is it, if the sales is no longer working, well, what is it? And you can sit down and look at it and see if you need to look at different channels, or if you look at different segments to target, or what is it that's off? And I think you should take that help. Waiting until it's too late is the worst. And actually, just because I want to be very conscious of your time, I wanted to address the topic of M&A, right? You had been doing M&A for Vodafone when you were in London, if I remember correctly. So let's suppose things are not going well in this situation, this fictional company, and you got to look for an exit, right? A fourth exit. You can salvage some things out of this company. Let's say patents you've got, or your database, or something you can sell to other companies, maybe to a bigger competitor or things like that. What would be your advice for companies saying, like, entrepreneurs giving up right now, and they're like, okay, I want to give up, but I want to try to get some money out of this. Yeah. Is there a way out of it? First of all, make sure that if you really have to give up. So take another look with some different glasses, or, bring someone in who thinks differently, and take a look at what do you have. Maybe you have something in there that is still very valuable for someone that you can either pivot into and build upon, or that you can then sell. But try to think out of the box, and not only stay with, within the product and the segment that you have and what you've been thinking all along, which is not working anymore. Try to think it from a different perspective, because it might mean that you have something in that product that could be that could suit someone in a slightly different segment who's adding that on to them. It could be something very different to what you've been thinking of before. So I would bring in some people that in the team or by the investors and brainstorm around what assets do you have, what could you do with it.
Oh, sorry, go ahead.
No, go ahead.
What's the kind of profile that can help you with that? Is there somebody from your investors, or you should go for an M&A broker, or?
I think the investors can help you in the first as a first port of call. So
they also want to make some money with.
Yeah, so start with that. You have aligned incentives, right? So
correct, yeah.
that should go some way. And then see, have that brainstorming session, really open session around what it is that you have and where that could be useful outside of what you've been thinking before. So try and come up with at least 3 different new things and see if that has legs. And if you cannot get anywhere in that, there are, of course, brokers that could look at this and see what they could do with it. But I would say that's the second level, second order. I would do the other. I would take the investor discussion first.
From your perspective of a VC right now, what is the thing that companies failing are most successful in actually selling in an M&A process when things go really south, but at least we managed to sell this part of the company? What's that kind of company that usually saves some bucks for somebody?
Yeah, so it can be different by different industries, of course, but if you have some IP or some patents that are very important, that can be relevant. If you have a really good team that is willing to continue and sort of at least an embryo of a product with a really good team around it that is willing to continue, you would probably have to lock them in and all of this, right? So it's not easy, but it can be a way.
And because one of the things that is trickier is that we as a startup grind, we get involved a lot with our community. We've been doing this, at least in Barcelona. I have been doing this for 6+ years. And in the last weeks, I have received several emails from the community members saying like, hey, can you help me with this? We want to sell the company. Do you know anybody doing M&A? Then you start asking is what you've got. And all of them are just trying to sell, I don't know, like a website or something. And like, okay, that's not really entirely valuable, right? I think the tangible parts are what you're saying, IP. And sometimes they want to know, but I will use the IP for another project. Well, maybe then you shouldn't be trying to sell anything. Or the team will not be, are not doing it. It's like, well, then it doesn't seem like you want to sell anything. You're trying to sell like the scrapes of your,
I mean, it's difficult to have the cake and eat it, but sometimes you can do it. But I would say, with the team, I mean, if you think about a company where you think this would be a good company where I would enjoy working and bringing my product to life within this larger entity or within this competing entity. And if you have such a company, I think now is the time to then to look at those, because that's also where probably if you think that's a good place to land the product, the team would probably be happy working there as well. So I would really look at those larger companies that could pick you up, or a competing company that could pick you up.
But also contacting them, the competing company directly, just devaluates your company directly, right?
Yeah, you have to be smart about it. You cannot just pick up the phone and say you want to buy us out, because then what they will do is they will hire your team.
Yeah, exactly.
One by one, the good ones. So it's tricky. You have to do it smart.
And how do you draw the line? How do you battle or fight back this sunken costs fallacy, right? I have invested so much in the project, I cannot give up now, right? Because you also said, don't sell too early, but also don't sell too late, right? They always say you've never sold a company. There's no such thing as selling too early, right? Or very counted. So how do you battle? How do you fight back that feeling of I can still chip in some more money, I can just still make it happen, and dragging other people along, which is the worst case.
Yeah, I think the VCs, in this situation, the investor side, will often know when it's a done deal. So I think you will often know that this is beyond salvage from a perspective of putting a lot of money in. But that doesn't mean that you couldn't maybe save something. And so put a little bit in and save this part. But then you need to be very clear on what it is you're trying to execute on, who you're trying to sell this to, where you're trying to land it. And put a very clear, when this time is coming, put a very clear restriction on yourself on how much more money will I put into this, and what KPI would I need to see to do that? So oftentimes I see that you set those processes when you know that it's almost gone. You say, okay, we try this quarter, we have this funding, let's see these KPIs. If we don't see these KPIs, that's it. And that makes it a little bit easier to then pull the plug when you've decided that, okay, it didn't hit those numbers.
But actually,
it's hard.
Yeah, it can be a good thing to have a company shut down, like from the VC perspective, because you will have already learned how this person operates, this CEO, this founder, whatever, and you will be ready to invest in him or her again, right, in a new venture. Is that something you use sometimes to kind of like tell them to shut down? It's like, don't worry, just create something new. We'll also invest in that. Is that an argument you would give to people as well? Maybe not directly, but.
No, not directly in that situation. But of course, because a person is not succeeding with one business doesn't mean that they cannot be successful with another business. It's definitely true. And you learn a lot from a failed investment and a failed journey as well. And it absolutely doesn't mean that you will not work together going forward. So.
3 last questions, very fast ones. The first one, when we always have got an investor here, we always like to ask, not where you invest, we can find out very easily, but what's the red lines? What's the red flags? Like when you see that, it's like, no, we don't do this, because we don't want people to contact you after this event and just saying like biotech, if you don't invest in biotech, or I'm a solo founder and you don't invest in solo founder, or prior to hitting 100 grand in monthly revenue. So something like that. What's the minimum?
Sure. Yeah. So, I mean, at Target, we don't invest in life sciences or biotech, as you mentioned, or we don't do that. We invest in health tech and in platforms and in tech, but not we draw the line there. And we actually do get a lot of approaches for those companies, and that will not happen. And for our growth fund, we do look at companies that have come to a certain size, but we have 3 funds. I don't know, we didn't talk about that in the beginning, but we have early stage fund, we have a growth fund, we have a mobility fund. But if I talk from the growth fund, we look at companies that have been able to show that they can reach, say, 5 million euro revenues, and that they are able to go international. That's usually what we see. So if you're smaller than that and you're sitting in one local market and you're growing nicely, but you haven't proven that you can actually take a step out into another bigger market, to the topic today, then we won't invest.
And so there's, as I mentioned, Startup Grind is the biggest community of entrepreneurs worldwide. And even though you mostly invest in European companies, correct me if I'm wrong, what is there that we can do to help Target Global from Startup Grind? How can we help you?
I think you're doing a lot already. I mean, by providing a place where we can meet people, either digitally or in person eventually, and where we can, to meet founders, meet companies, meet investors. That's hugely valuable, and especially in an ecosystem like in Spain now that is growing so strongly. At least before this COVID, it's really moving very fast. So I wouldn't give you any feedback on doing something better there more than you're doing. I think you're doing great for us investors. So keep going with this. And I think it's great that we're doing these online meetings now, so that it doesn't become, just come to a halt. I think we can continue online.
But we need to have our in-person event once this is possible, hopefully next year in the conference. Like, you're not getting away with it.
Of course.
What's the just signature question, just to wrap this up, is like, what's the most expensive fuck up you've ever done, professionally speaking? And if you can quantify it.
Quantify it.
Yeah. It's not, I will not allow an answer like I hired the wrong person. Like, everybody gives that answer and it's not acceptable.
Yeah,
where did you squander the most money in a failed project or failed, bet?
I think it's rather one I didn't do.
I would rather hear about one you did do. Yeah.
Well, I
because the ones you didn't do, you don't lose money. You might not
but I did,
have earned it.
Because it went really. I should have done it.
That's called anti-portfolio, right? No, we're just more, because what we're trying to do here is to humanize the mistakes. Like it's all right to, like you launch this marketing campaign and you fuck up and you just all of a sudden it's like, oh my God, I lost $250,000 there. But we want to make sure that everybody's sort of opening up about this, because it happens to everybody, like everybody.
Absolutely. I think probably the biggest thing was when we launched a price plan in telco, when I was in my telco days. And we launched an unlimited price plan too early in the market without knowing how much people would talk. So we were worried about data consumption and all of this, because that was what we were worried about in the other market. But in this market, we should have worried about talking. So the minutes went so high that the gross margin on this product went negative. So every product, not for every product we sold, but as a category, it went negative. And we had like 5% of the customers who took this product, they killed the whole margin on the whole product for all customers. So that was not good.
Unless SoftBank had been investing in it, it's like, oh, but you're growing so much. We don't care about that.
We grew a lot.
Exactly. It's growth.
But we had to implement like a fair usage policy on the product after, which was not fun.
So that's the price you pay for pioneering such groundbreaking, technologies. And the last one is the last question for tonight is, everybody, it's the hardest question you will ever be asked.
Okay.
Everybody has got a useless superpower. That's something you do exceptionally well, but it's useless. Like it's really useless, but you do it really, really well.
Like, I can lick the tip of my nose with my tongue.
Oh my God, that's okay. that's really useful. That's
it's
useful.
Not useful. It's
no,
not
it's useless.
useful.
That's a really good one. That's a really good one. Normally people have got, you come up with the best answers all the time.
Okay, I'm glad.
People are, I'm just saying, like in general, like they are very creative about this, and it goes to show that everybody has got this like really small thing they can do. And we had like once, I remember this one of the biggest investors in Spain, Luis Martin Cabildo, says like, I always forget to lock my house. It's been robbed 3, 4, 5 times. It's like, oh my God, like that's pretty useless superpower.
Yeah.
Exceptionally well. All right, Malin, thank you very much. We don't want to take much more of your time. You've been extremely generous for sharing this almost an hour with us. Looking forward to meeting you in person when we're able to do our conference next year. Until then, thank you for your generosity and stay healthy.
Thank you, Alex. It was a pleasure being here. So thank you so much, and I hope to see you in person next time. Yeah.
Also, keep investing in Barcelona, because I think we're producing great startups, and we got to be thankful from the Barcelona perspective that you were the first international VC to set office here, and that is inspiring other international VCs to come. So it always takes the first, right? So I hope that this investment is profitable at the end of the day.
Absolutely. It's a great ecosystem. Thank you so much, Alex.
Thank you, everybody, for joining Startup Grind. See you in a couple of weeks. Goodbye, everybody. Have a good night. Bye-bye.